So this week has been a fascinating one, particularly because of the sort of for now limited financial crisis with failure of a couple key banks, Silicon Valley Bank, Signature Bank, the government stepping in to guarantee deposits, and overall we're left to wonder how limited in scope this financial crisis will be, what other companies may be affected, and what the weight on the overall markets will be. Today I'm going to focus on one particular sector, technology, and two stocks holding up quite well. So I've been asked a lot over the last couple of days about the financial crisis of 2023, some banks going under, the government stepping in, all of this happening just before the Fed week coming up here, a Fed meeting coming up later in March. What does this all mean? What are the ripple effects? You think a lot about cryptocurrencies, a lot of which certainly have exposure to these banks based on where they're located and the types of venture capital firms that are and companies that were involved with them. But I think it's helpful in this sort of environment to think about the scope of the market deterioration. So far, it's been fairly limited into the financial sector. Look at a couple charts that tell that story. Before we get to the chart, by the way, I want to let you know if you like this sort of thinking about investor decision-making, technical analysis, behavioral finance, I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Let me know in the comments below, do you agree with the bullish case for these names? Why or why not? Why not? Tell me in the comments. When we're looking at the charts here, we're starting with a regional bank ETF. If you want a chart that shows sort of the severity and the sudden decline that we've seen in the markets, I think the KRE is a really good one. The KBE is the bank ETF, certainly showing some downside movement, but not nearly as much as regional banks. In fact, if you look at the ratio of regional banks to mainline banks, which is KRE versus KBE, certainly showing how regional banks have taken it so much more significantly to the downside. Now, this is for good reason, because the major banks after the financial crisis, 2008, 2009, had a lot of additional regulatory requirements to make sure that they had capital to cover withdrawals and all those sorts of things, get through the stress tests, you may remember. Regional banks actually were able to avoid a lot of those additional regulations, and unfortunately, those are some of the banks that we're seeing affected here over the last couple days. So here's the sell-off in regional banks. But you know what's interesting? If you look at other parts of the market, you would not know that this huge sudden financial crisis has taken hold. For example, here's the XLK, the technology sector. This is actually showing this consistent upswing over the last 4 or 5 months. Coming off the October low, we see a higher low in November, a higher low in December into January, and now a higher low once again in February and March. The XLK is actually holding support right around $135. That's where we pulled back after the new swing high in February. We sort of reached there in early March, bounced off and hit there again. You'll notice we also bounced off an ascending 50-day moving average, which is a pretty classic point for a chart and uptrend to pull back to before resuming that trend to the upside. So overall, it's setting up as what you might call a bull flag pattern, which is when you have a rally, a pullback, and sort of a parallel decline of lower highs and lower lows, but within a much shorter time frame of the rally going up here. And basically, when you get above that trend line connecting the highs, that confirms the bull flag pattern. You generally take the height of that, what's called the flagpole, and project it, off of the top, which gives an upside objective sort of in the upper 150s, back toward the March 2022 high. That's a quick analysis using the what's called the bull flag pattern. But what's interesting is the strength in technology certainly has had me think about which areas of the market you're seeing that sort of strength. And two stocks that come to mind, one in the technology sector, AMD, which is the panel on the bottom, the other one, Meta Platforms, of course, in the communication services sector in the top half of the chart. Now, I've noted, you'll notice sort of a similar pattern to the XLK, but while the XLK is sort of having a bull flag pattern, this parallel decline, Meta and AMD are actually holding up with this sort of a sideways pattern, which you might call a rectangle pattern, a rally, and both of them gapped higher at the beginning of February. From there, they've sort of settled into this range. For Meta, from around 168, we'll call it, up to around 195, and then for AMD from around 76 on the low end up to around 88 or 89 on the upper end. Here's what's happened, though. If you look at that pullback in February, what's encouraging to me is, again, even though you've seen, you've heard a lot of concern about the overall market structure, what's going to happen with the Fed, what do these banks going to mean for the strength of the broader economy, I would say that charts like this tell me that things are actually still okay. If things are really getting bad, you won't have defensive sectors leading higher on a day. You'll actually see everything get dragged down by the the sector that is really the source of the contagion. You'd also most likely see charts like Meta, instead of threatening to make a new swing high, which both of them are actually done today on Tuesday, March 14th, but you'd see them failing to hold support. So why are these important charts to watch? If you're trying to think about the broader exposure that the market may have to what we've heard with the banks going under over the last couple of days, I would be looking at charts like this. If these are able to hold recent support levels, conditions aren't getting that bad because these stocks are able to hold that value that they've reached after a rally over the last 4 months. If they fail to hold those support levels, it could be a sign of additional weakness to come, not just from these stocks, but also maybe other parts of the market that have been holding up, like semiconductors, maybe some industrials, and also, of course, more speculative higher beta names or more riskier names that tend to lead on the way down, of course. So with both of these charts, the way that I like to use technical analysis is to look to the left, see those key levels, which I've identified with these horizontal purple lines, and then set price alerts. I use stock charts for that, but basically say, tell me when Meta breaks below 168, alert me when AMD breaks below 76. I can get a text on my phone, get a pop-up, and get an email to confirm if and when that might happen. Until then, don't worry. Just sit back and follow those trends higher. So overall, we talked about the weakness in regional banks. Of course, the banks going under over the weekend, Signature Bank in New York and Silicon Valley Bank first over the weekend. Both of those, of course, being removed from the S&P after selling off very aggressively. The rest of regional banks like Key and even fairly stable ones like Key and Huntington Bank and Fifth Third and others really dropped quickly in sympathy with those banks going under, because it's sort of an open question. What's the next domino to fall? However, looking at the strength in a sector like technology and focusing in, keying in on some of those key names that are managing to hold up, I think setting price alerts at the recent support levels, and as long as those don't trigger, things overall seem to be okay. If you like this sort of thinking about technical analysis related to macroeconomic analysis, behavioral discussions, and investor psychology, I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. Put a comment below. Do you agree with the bullish case for Meta and AMD? Let me know and why. For Market Misbehavior, I'm Dave Keller. Be well, stay safe. Talk to you again soon.